Okay, some depreciation-related things to take note of as a result of the tax reform bill. A lot of cool things out there. Now, bonus depreciation, a lot of you may be familiar with bonus or the term bonus depreciation, where before you could write off 50% of your assets, or sometime like years ago, 100% of your assets. But before, it had to be on brand new assets. Now they've changed it. It can be new or used assets. So you can buy, if you're buying used equipment or used vehicle for that matter, there's still opportunity to take big tax deductions with respect to your fixed assets. Some of the other changes, Section 179 is another way to accelerate deductions for depreciation. They've made it easier to take that on rental properties now, and they've also made it able to take it on non-residential commercial properties. So if you have a commercial property, some examples might be before you replaced the HVAC system, before you had to depreciate that over 39 years because it was a commercial property, now you can actually expense that right away. So HVAC, fire protection, roofs is another big one on these commercial properties. So if you replace the entire roof on a commercial property, and commercial meaning non-residential, obviously. So office building, strip center, something like that.
Yeah, and these accelerated depreciation on the tax side, what we're seeing is it's been really helpful for those investors doing short-term rentals, Airbnbs, where you're furnishing a lot of these. So now, before if you bought used furniture to furnish your Airbnbs, it was not eligible for the bonus depreciation. Now it is. Also another big one, now that it's 100% for cars. So cars used in majority for businesses, there are certain instances where you can write off, if you bought a Tesla for, I don't know how much Teslas cost, but let's say it's $100,000, it's possible to write off $100,000 in the year of purchase on the tax return. Okay, so very, very powerful.